What type of business should your author business be? What's an S Corp? What's an LLC? Does it even matter? This is one of the top questions that I get from authors, with a close second being, I don't even know what questions I'm supposed to be asking, which is totally understandable. So we put together a list of 5 questions you should be asking your CPA. I'm going to put that somehow in the description. And over the next several videos, we're going to cover the answers to those questions so that you can make sure that you're running your business the right way. Before we jump in, I'm Seth Norris. I'm a CPA, and I run a CPA firm where we help authors pay less taxes, earn more profits, and find more time to write great books. That's the end of the scripted part of this. If you were unlucky enough to watch the first video that I posted to this channel, then you'll know that this is a work in progress, and we're going to get better every time we do this. So, going to go into business entity choice, LLC versus S Corp. What does it mean for your author business? Whenever you start a business, whenever you start selling something and getting money from the things that you're selling, you are by default a sole proprietor. So in this video, we're going to ignore partnerships and multi-member businesses. We're going to assume you're doing this solo. Maybe later we'll do a video on just partnership type stuff. So if you don't have any kind of business filings with the Secretary of State, then you are just a sole proprietor. What that means is whenever you file your tax return, you're not going to file a separate business tax return. You're going to file your business income and expenses on Schedule C of your personal tax return. The net income after your expenses from your business is going to get added to all of your other personal income from W-2s, from interest, from investments, from any other source. It's all going to get added together, and it's all going to be subject to your personal tax rate. In addition to that personal tax rate, the income from your business is going to be subject to an extra self-employment tax. It's another 15.3% on top of the taxes you're already paying personally. That 15.3% is the government's way of making you pay Social Security and Medicare. So think about it like this. If you had earned that income through a W-2 day job, then you would have 7.65% of your income withheld from your paycheck and paid to the government for Social Security and Medicare. Your employer would have matched that same 7.65% on your behalf. So a total of 15.3% would have been sent to the government for you. Half of it paid by you, half of it paid by your employer. Whenever you're self-employed, the government still wants you to have that Social Security and Medicare tax, but you get to pay both the employer and the employee portion, which means you get to pay the total 15.3%. The way that they make you pay that is by assessing self-employment tax on your personal tax return based on your business income. So for example, if your personal tax rate is 20% and you have 15.3% self-employment tax, you're going to pay 35% tax on your business income before considering any state taxes. All right, so you may have heard online that if you set up an LLC, then you can save all this money in taxes. That is absolutely not true. An LLC is considered a disregarded entity. If you set up an LLC for your business, your tax return looks exactly the same as if you did not have an LLC. You still file it on Schedule C that still gets attached to your personal tax return. You still have self-employment tax. You can still take all the same deductions. It's as if the LLC doesn't exist and you're still taxed as a sole proprietor. So what would be the reason for getting an LLC? The first reason would be for legal liability. Now, I'm not an attorney, and so I can't speak to legal matters or legal opinions or anything like that. But the idea here is that an LLC could protect your personal assets from claims against the business. Another reason why you might want to have an LLC is because it does help you establish the intent to make a profit. What does that even mean? If the IRS were to ever look at your business and say, hey, this looks more like a hobby. And since it's a hobby, you don't get to deduct all these expenses you've been deducting, but you still have to pay taxes on the income. At that point, you have to show the IRS that you had the intent to make a profit, even if you didn't make a profit. So what things show the intent to make a profit? One of the best things you can have is just good record keeping, good bookkeeping in place, because people typically don't do that for hobbies. Another thing, though, would be like an LLC filing or some sort of filing with the Secretary of State. That's not typically something someone does if it's just a hobby that they're not trying to make a profit off of. There's other things you can do, and there's no one thing that's just a bulletproof get out of jail free card. But all those things together could help your case to prove that this is a legitimate business and not a hobby. Third reason is for banking purposes. Some banks make it easier to open a business bank account if you have a filing with the Secretary of State to form an LLC. So there's plenty of reasons why you might want to have an LLC. None of them are tax reasons. What about S Corp or S Corporation? What even is that? What does it mean? To be an S Corp, all that means is that you're an LLC or any other type of entity that has made an election to be taxed under subchapter S of the IRS code that you don't care about the number. So in doing that, you're considered an S corporation. So you can be an LLC for state legal purposes, taxed as an S Corp. Why would you want to be taxed as an S Corp? If your business is taxed as an S Corp, then your business is actually going to file its own tax return, separate from your personal tax return. That business tax return, it's 1120S. It's going to list all the income and expenses of your business. You might also need to list your assets and liabilities of your business and have a balance sheet in there. And at the end of the day, the net income on that business tax return is still actually going to flow over to your personal tax return. What that means is that you're not going to pay taxes at the business level. You're still going to include that net income on your personal tax return, and it's still going to be added to all your other personal income and taxed at your personal tax rate. The difference is that an S Corp's income is not subject to that extra 15.3 self-employment tax. So you can save potentially 15% of your business net income in taxes. The next question I always get is, wait, why doesn't everyone just become an S Corp? The reason is because there are other costs, compliance issues, and even other taxes that you might have to pay as an S Corp that you wouldn't have to pay otherwise. So what you have to do is figure out, does the tax savings do the tax savings? Does the tax savings or the tax savings greater than the amount of extra costs and other taxes that you might incur to be an S Corp? If the answer is yes, then it could make sense. So let's go over what some of those costs and extra taxes are. Whenever you're an S Corp, the biggest issue is that you have to pay yourself a reasonable compensation for the work you do in the business. Whenever you figure out what that reasonable compensation is, it has to run through payroll and it has to be subject to payroll taxes. Payroll taxes include the employee and employer portion of Social Security and Medicare. Remember, that's 15.3%, the save and self-employment tax. So real quick, just do the math on this. If you made $50,000 in your business after expenses, but before paying yourself, and you determine that a reasonable compensation for the work you've done in the business is $50,000, then with the S Corp, you have to run that $50,000 through payroll, and it's subject to 15.3 payroll taxes. But if you had left that business as an LLC or just a sole proprietorship, then that $50,000 would have been subject to the same 15.3 self-employment tax. So all you've done is traded self-employment tax for payroll tax at the same exact rate. And you've made your tax filing more complicated. You might also have to pay unemployment taxes and other taxes, and you have more stringent bookkeeping requirements with the S Corp. So you have to make sure that your business is earning enough money to justify the reasonable compensation that you have to run through payroll and pay payroll taxes on, and then still have enough profit left over after that to save enough self-employment tax to justify the cost of the S Corp. Because like we said, you're going to have an extra tax return to file. You probably need to start paying for bookkeeping services because the bookkeeping needs to be a little tighter than it would have been if it was just an LLC or a sole proprietorship. And you could have other taxes and other costs involved. So yes, you can save money with an S Corp, but if you prematurely elect S Corp status, you might find yourself in a situation where you actually have more costs and more taxes than you're saving by having the S Corp and just more headache in general. So make sure you really nail this down and make sure that it's the right move for you before you make that election. Wrap it up. If you are just starting out, I'd probably go with the LLC option just because it's not that complicated or costly to set up and it has some benefits to it and it won't change anything for tax purposes. If you're established and you're earning a significant amount of income, then I would check out to see if it makes sense for you to be an S Corp. If you want to see the answers to the other 4 questions on that PDF, like and subscribe. Is that what I'm supposed to say at the end of these? It feels so weird. Anyway, I hope this was helpful. If you have any more questions about this, drop them in the comments. Anyway, until next time.